Before there were banks, there was clay. Before there were contracts, there was a reed. And before Wall Street, before the city of London, before any financial system you've ever heard of, there was Babylon. 3,000 years ago, in the fertile plains between the Tigris and Euphrates rivers, stood the most powerful city on earth. Babylon, a city of 1 million people, towering ziggurats, and streets that hummed with commerce day and night. Merchants traded grain, silver, textiles, and livestock. Goods moved across hundreds of miles. And with that trade came a problem every civilization eventually faces. How do you store wealth, move money, and lend resources across distance and time? The answer came from the most unlikely place, not from merchants, not from kings, from priests. The great temples of Babylon, towering stepped pyramids called ziggurats, became the world's first financial institutions. Farmers would deposit their grain, silver, and livestock with the temple for safekeeping. The temple would record the deposit on a clay tablet, and in return, the depositor would receive a receipt. Sound familiar? That is a bank account. 3,000 years before your high street branch opened its doors. But the temples didn't just store wealth, they lent it. A farmer needed seed grain before the harvest. The temple would lend it with interest to be repaid after the crop came in. A merchant needed silver to fund a trading expedition. The temple would provide it, taking a share of the profits on return. Every transaction was recorded, every loan was sealed. A cylindrical stone seal, unique to each individual, was rolled across wet clay to authenticate the contract. This was your signature, your legal identity, your credit record, in clay. Then around 1750 BC, something extraordinary happened. King Hammurabi of Babylon did something no ruler had done before. He codified the rules of finance into law, written in stone, literally. The Code of Hammurabi contained over 280 laws, and a significant number of them dealt specifically with money, debt, and interest. It set the maximum interest rate on silver loans at 20% per year, on grain loans 33%. It protected borrowers from predatory lenders. It regulated banking 3,700 years ago. By the 7th century BC, banking had moved beyond the temples entirely. Private banking families had emerged. The most powerful was the House of Egibi, a Babylonian banking dynasty that operated for over 150 years across 5 generations. They issued loans, accepted deposits, financed trade, and managed real estate. They were the Rothschilds of the ancient world. The Egibi family invented something that changed commerce forever: the clay envelope, a contract tablet sealed inside a clay shell. To verify the contents, you had to break the outer shell, making any tampering immediately obvious. This was the world's first tamper-evident financial document, the ancestor of every sealed bank statement you have ever received. Babylonian banking didn't stay in Babylon. It traveled along the river routes, the trade roads, and the merchant networks that connected the ancient world. The financial ideas born on the banks of the Euphrates would flow westward into Persia, into Greece, into Rome, and eventually into the foundations of every modern financial system on Earth. Think about what you did last time you went to the bank. You deposited money for safekeeping, you signed a contract, you paid interest on a loan, you received a stamped, authenticated receipt. Every single one of those actions was invented in Babylon. The technology changed, the human behavior didn't. The trader watching stock prices on a screen and the Babylonian merchant counting silver shekels by lamplight are doing exactly the same thing. Measuring risk, calculating return, trying to turn today's resources into tomorrow's wealth. 3,000 years apart, the same species, the same instinct. Every bank you walk into, every interest rate your central bank sets, every contract you sign, every financial regulation your government passes. They are all direct descendants of systems invented by priests, merchants, and scribes in ancient Mesopotamia. The world's first bankers didn't wear suits, they wore linen robes, and they worked in clay. Babylon fell in 539 BC when Cyrus the Great of Persia conquered the city without a battle. The great ziggurat crumbled, the hanging gardens faded into legend. But the financial system Babylon built, the deposits, the loans, the contracts, the interest rates, the tamper-evident documents, none of that disappeared. It simply moved on, as money always does. The next time you check your bank balance, take a moment. Somewhere beneath the app, the algorithm, the data center, and the regulation, at the very bottom of that stack, is a clay tablet, pressed by weathered hands in candlelight beside a river in ancient Iraq. That is where it all began. If you found this fascinating, subscribe, because next time we're going to medieval Florence, where a family of wool merchants invented the cheque, the letter of credit, and very nearly destroyed the entire European economy in the process. The Medici, coming next. Don't miss it.